Hey friends, Loss Ratio here, and welcome to this inaugural episode of Law Talks Legislation.
I'm so excited!
In this episode, we're taking a first look at the newly introduced legislation in the U.S. Senate from California Senator Adam Schiff.
Yeah, I've heard of it.
In case you missed it, on Friday, July 18th, the senator introduced the INSURE Act. That's the Incorporating National Support for Unprecedented Risks and Emergencies Act.
That's a nice name.
Now, I'd bet you this $100 bill that some staffer used ChatGPT to come up with that acronym. But you know what? I'm okay with it. Now, to be clear, this new bill was just introduced mid-July 2025. However, Senator Schiff actually introduced a very similar bill by the same name in the House back on January 10, 2024. This was obviously before he moved over to the Senate side. That bill, H.R. 6944, has been stalled in the Financial Services Committee of the House.
It won't budge.
So now, fast forward 18 months, and in his new Senate seat, Senator Schiff introduces this new version of the bill.
I like new things.
I'll upload a separate video detailing the key differences between what was proposed in last year's bill versus this new version. The biggest change relates to the NFIP, or National Flood Insurance Program, but we'll save those details for that comparison video, so stay tuned.
It'll be here before you know it.
Okay, so what is this new INSURE Act? Well, it's essentially legislation proposing a federal catastrophic reinsurance program.
Oh, wow.
What it means is that the federal government would be creating an alternative to the private reinsurance market, giving insurance carriers a presumably less expensive option for securing catastrophic reinsurance cover.
Okay, I get it.
So what's the goal here? Well, let's look at the senator's press release for the answer.
That's a great idea.
Senator Schiff introduces bill to stabilize insurance market, protect homeowners from increased costs of natural disasters. The senator is quoted stating, "Too many families and small businesses are struggling to keep up with the rising costs of insurance, and steep year-after-year price increases are simply unsustainable. Significant steps must be taken to address this crisis, and the INSURE Act is one of them. This bill would create a federal risk reinsurance pool to bring down costs and make policies more affordable." So before we outline what's actually in the act, let's briefly cover the reasoning behind how it could accomplish its stated goal of stabilizing the home insurance market.
How's it going to do that?
To varying degrees, insurance carriers purchase reinsurance coverage to limit their liability when catastrophic losses occur. Many carriers, especially those offering policies in higher cat risk areas, typically purchase a significant amount of reinsurance to protect their own reserves and balance sheets in the event they sustain major losses from a catastrophic weather event. And this reinsurance does not come cheap.
Ooh, pricey.
Some carriers allocate as much as 50% of their total expense budget toward reinsurance.
That's a lot of money.
Why does that matter? Because those reinsurance costs ultimately trickle down to consumers in the form of higher premiums. So when reinsurance costs increase, as they have significantly over the past 3 to 5 years, consumers' premiums, the cost of insurance, also increases.
Well, of course it does.
Now, I'd be remiss in not mentioning that California, the state Senator Schiff represents, is the only state in the country whose state regulation does not allow carriers to include their cost of reinsurance in their rate filings. But we'll save that topic for another day. Okay, so what's actually in the INSURE Act?
Now tell us about it.
For sake of brevity, we won't take a super deep dive here, but let's cover the basics as they currently stand. First, it would establish a catastrophic property loss reinsurance program to provide reinsurance for qualifying primary insurance companies. Notice the word qualifying. There are a lot of qualifiers. First, in order to qualify for the program, a carrier must offer policy coverage for specific perils according to the following tiered peril rollout.
This could be fun, right?
In year 1 of the program, wind and hurricane coverage must be included in policies offered. In year 2, the perils of severe convective storm and wildfire must be included. In year 3, flood must be included. And in year 5, earthquake must be covered. So the intention is to ultimately get back to true all perils policy coverage, which the US hasn't really seen since the 1920s.
That was a long time ago.
And since we're talking timelines, note that, according to the bill, the timeline for implementation and rollout could be as long as 4 years after the bill is passed in Congress and signed into law by the president. So just understand, even if this bill did make it all the way through Congress and was ultimately signed into law by the president, it could take up to 4 years before it actually started rolling rolling out. So suffice it to say, this is no quick fix to stabilize the US property insurance market.
No, it ain't.
So what else would be required for an insurance carrier to qualify for this program? Back to the bill language. A participating carrier must offer a loss prevention partnership with the policyholder to encourage investments and activities that reduce insured and economic losses from a catastrophe peril.
Yes, I do like that.
Now, if you've been following me for any length of time, you know I'm all about loss prevention. There's very little detail spelled out regarding exactly what these loss prevention partnerships would entail, but I do love that loss prevention in some meaningful form would be a part of the program. Next, a participating insurer would be required to pay a premium to the program quarterly. Why? Because
Ain't no free money, my friend.
there's also some language in the bill addressing minimum premiums, which I find interesting. It says,
The Secretary may not establish any premium that is less than 50% of the amount equal to the sum of the expected average annual losses for the participating insurer.
and I can't help but wonder who's actually determining an individual participating carrier's expected average annual losses, and how is that going to be calculated?
It's a valid question.
Okay, moving on. The INSURE Act would require a 27-member advisory committee.
Holy crap!
The advisory committee's role would be to advise the secretary on key program elements like payout thresholds, premium calculations, data collection, loss prevention partnerships, and more. Oh, and you're probably wondering about this secretary.
Yeah, who is?
Well, it's referring to the U.S. Secretary of the Treasury, an appointee of the President and currently Scott Bessent.
I'm the secretary.
But remember, the hypothetical rollout of this program, if actually passed by Congress and signed into law, would very likely take place well beyond the current administration's term, so not likely that Bessent would be at the helm of this program.
I'm okay with that.
Regardless, we're talking about the Secretary's 27-member advisory committee, which would be composed of 5 members representing consumer organizations, 3 members from primary insurance companies, 1 global reinsurer active in the U.S.,
1 domestic-focused reinsurer.
2 state insurance regulators from U.S. states,
2 legislators serving on insurance oversight committees.
2 independent insurance agents,
1 representative from a mortgage lender.
1 representative from a bank, and 1 representative from each of the following federal agencies: Department of Housing and Urban Development, Department of Health and Human Services, Federal Housing Finance Agency, Department of Veterans Affairs, Department of Agriculture, Federal Emergency Management Agency, Office of Management and Budget, Environmental Protection Agency, and finally, 1 representative from the Financial Stability Oversight Council.
That's a lot of names.
I don't have a ton to say here, but the size of this committee and the fact that 75% of its composition falls outside the realm of expertise in insurance does make me worry about this committee's ability to fully grasp and execute on such a complicated issue.
Well, I'm a little worried too.
Okay, so that's a quick snapshot of what the bill's proposing. Let's wrap up with a few thoughts. There's really no argument that the country is absolutely facing an unprecedented insurance crisis of availability and affordability.
No argument there.
And it's no surprise that this bill comes out of the state of California, one most deeply impacted by this crisis. And I have little doubt that Senator Schiff is feeling heat from his constituents over this issue.
As he should be.
And in general, I don't think this idea of a federal catastrophic reinsurance program is a horrible idea. We need bold ideas and action. The crisis isn't going to fix itself.
You got that right, kid.
I like the idea proposed of getting back to all perils policies. The nationwide coverage gap for the perils of flood and earthquake is well over 90%, exposing consumers to massive risk. Closing that gap through all perils coverage would be a huge step in the right direction.
1 step at a time.
I also love that the proposed program includes a strong loss prevention component. This is a crucially necessary aspect of a stabilized and sustainable insurance market. A predict and prevent mindset must be adopted by both the industry and consumers in a collaborative effort that benefits everyone.
Everyone wins.
I often daydream about the potential of federal support behind educational efforts regarding loss prevention. Think only you can prevent wildfires and non-weather water losses. From Friends Don't Let Friends Drive Drunk to Click It or Ticket, the Ad Council has been involved in dozens of nationwide ad campaigns to help inform and educate the population on major issues impacting the well-being of society. And I think it's fair to say that the current insurance crisis is having a major impact. Now, to be clear, the INSURE Act does not specifically say anything about the Ad Council or national education campaigns on loss prevention as a part of the required loss prevention partnerships. But hey,
A guy can dream, can't he?
finally, I'd be remiss not to mention that I honestly didn't love the tone and the vibe of Senator Schiff's announcement of this bill. It read, legislation follows leading insurance companies pulling back from states prone to natural disasters and hiking insurance prices for consumers, leaving families in the path of the fires with only bare bones insurance or no coverage at all. The way this statement paints insurance companies as the big bad corporations, pulling back from natural disasters, hiking prices, leaving families in the path of the fires, this framing of the issue is not terribly surprising, but it completely ignores the broader context of why this is happening.
That's the bigger issue.
We'll save that for another video because I've been talking entirely too long, but suffice it to say that the senator's home state of California has regulated itself into the crisis they're currently facing.
Show me where I'm wrong.
When regulatory governmental intervention in free markets contributes to a crisis, it can be hard to understand and believe that the same government will solve the crisis.
That's something to think about.
Ultimate solutions to this crisis are going to require coordination and collaboration between all stakeholders. Finger pointing and blame placing without any introspection doesn't exactly motivate and illustrate a strong collaborative spirit. Okay, I'll shut up now.
Good, it's about time.
As always, thanks for watching. I'd love to hear your thoughts in the comments below. Much more to come on this INSURE Act, so stay tuned.